Bitcoin just hit a wall. Privacy bombshell just dropped, and this week could define the entire market. What's up, party people? That's right, the past 48 hours have been an absolute whirlwind. We're breaking down Bitcoin's battle at $115,000, Ethereum's game-changing roadmap, the SEC's 4D chess with ETFs, and the catalysts that make this one of the most important weeks of the year. So let's get into it. Bitcoin got brutally rejected, but the whales are secretly defending this one critical level. Bitcoin made a run at $117,500 over the weekend, but got slapped back down to current levels around 115. The rejection at that resistance level triggered algorithmic selling that cascaded through leveraged positions. But there's a key detail. The pullback stopped exactly where the smart money expected, at the $115,000 psychological support level that's been holding since early September. Weekend volume hit $45 billion across major exchanges, the institutional players managing risk ahead of this week's Fed meeting. The fact that Bitcoin held above 115 during Sunday's Asian trading session while traditional markets were closed shows independent strength. Large cap altcoins are coiled and ready to rally if Bitcoin can reclaim the $117,000 price point. With the FOMC meeting starting tomorrow, institutional money is playing defense while retail traders are getting chopped up in the volatility. The options market is pricing in 4 to 6% moves in either direction post-Fed announcement. Smart money knows that September Fed meetings have historically created 10% swings in crypto within 24 hours of policy announcements. So why it matters, the market's showing sophisticated risk management while setting up for potential explosive moves once Fed uncertainty clears. The SEC just delayed more ETFs, so here's the hidden message in their decision. The Commission extended review periods for Ethereum staking ETFs, XRP ETFs, and yes, even Dogecoin ETFs. But here's the most important thing that people are missing. The delays aren't rejections. They're the SEC buying time to create a consistent framework. The agency learned from the Bitcoin ETF approval process that rushed decisions create regulatory headaches later. Ethereum staking ETFs represent the biggest regulatory challenge because staking rewards can be classified as securities under the Howey test. The SEC is walking carefully here because their decisions will impact not just ETFs, but the entire proof-of-stake ecosystem. A wrong move could accidentally classify every validator as a securities dealer, which would be catastrophic. The fact that XRP and Dogecoin ETFs applications are getting serious review rather than immediate rejection signals the SEC's evolving approach. XRP's legal clarity from the Ripple case provides a pathway, while Doge inclusion shows the agency recognizes market demand for diverse crypto exposure. The December 15th timeline gives applicants time to address technical concerns, so the SEC is building a comprehensive crypto ETF framework rather than making piecemeal decisions, which creates a better long-term clarity for the entire industry. Ethereum just dropped a bombshell that could make institutions go all in. Ethereum developers revealed a comprehensive privacy roadmap that adds privacy-preserving features at every network layer. So this just isn't another upgrade. It's a fundamental shift toward making DeFi transactions as private as traditional banking. The roadmap includes zero-knowledge proofs for transaction amounts, stealth addresses for recipient privacy, and encrypted meme pool technology. The timing is perfect as institutional adoption accelerates, but privacy concerns remain the biggest barrier to enterprise DeFi integration. Major corporations want blockchain's efficiency, but can't expose sensitive transaction data to competitors. This privacy layer solves that problem. Ethereum is targeting that $5,000 level it briefly touched in late August before pulling back to the current $4,200 range. Leading DeFi protocols, including Uniswap, Aave, and Compound, are already exploring integration possibilities with the new privacy infrastructure. The roadmap includes backward compatibility, meaning existing DeFi positions won't be disrupted while new privacy features roll out gradually through 2026. This measured approach shows the foundation learning from previous upgrade challenges. So why it matters, privacy-enabled DeFi could unlock trillions in institutional capital that's been waiting on the sideline due to confidentiality concerns. So the U.S. is losing the crypto race. These two countries are now leading the charge. First, El Salvador. They added 14,000 troy ounces of gold worth approximately $43 million to the treasury reserves after pausing Bitcoin accumulation. Total holdings now stand at $207 million across Bitcoin and gold. This isn't a retreat from crypto. It's a sophisticated treasury management that reduces correlation risk while maintaining the Bitcoin standard as their primary reserve strategy. Next, Pakistan's central bank invited international crypto firms to apply for licenses under their new regulatory authority. Now, this represents a complete reversal from the previous crypto stance and opens a market of 240 million people to legitimate crypto services. The licensing framework includes custody requirements, AML compliance, and consumer protection standards. The weekend developments in Pakistan follow similar moves from Malaysia, Thailand, and Singapore in creating clear regulatory frameworks that attract rather than repel crypto innovation. While Western regulators debate, Asian financial centers are building the infrastructure for the next wave of institutional adoption. This geographic arbitrage is pushing innovation eastward. So what this means, global regulatory competition is accelerating crypto adoption while creating pressure on slower moving jurisdictions to catch up or lose market share. So this looks like a degen casino, but it's secretly a Wall Street killer. PancakeSwap just launched gamified Bitcoin and Ethereum price predictions on BNB chain with 5-minute betting rounds. That's right. This might sound like a casino feature, but it's actually sophisticated prediction markets infrastructure that provides real-time price discovery and hedging tools. The 5-minute window creates a micro derivatives that traditional finance can't replicate, giving DeFi unique advantages in risk management. The prediction market expansion indicates growing institutional interest in decentralized price discovery mechanisms. Traditional prediction markets require complex regulatory approval, while DeFi versions operate permissionless with automated settlement. Major trading firms are already using these tools for hedging strategies and market intelligence gathering. Pancake's expansion highlights Binance Chain's growing role as a testing ground for DeFi innovations that eventually migrate to Ethereum mainnet. The lower transaction costs enable experimentation with microtransactions that wouldn't be economical on Ethereum. This creates a natural development pipeline from Binance Chain prototypes to Ethereum's production deployments. So DeFi continues creating financial products that traditional markets can't match, all while building bridges between crypto native and institutional users. So this week's a perfect storm. So here are the dates you gotta watch. So here's what's coming. Monday and Tuesday, the Fed meeting begins. The markets is pricing a 70% chance of a rate cut, but the real action is in Powell's press conference at 2:30 p.m. on Tuesday. Bitcoin historically moves 8 to 12% within 2 hours of these announcements. Wednesday, with Fed uncertainty cleared, could see technical breakouts. Bitcoin needs to reclaim the $117,500 level price hold and hold it there for 4 hours to trigger algorithmic buying. The next target above that is $122,000. Then on Thursday and Friday, we're bringing quarterly expired chaos. A staggering $8.2 billion in Bitcoin options and $3.1 billion in Ethereum options must be settled. A close above $118,000 for Bitcoin could trigger a massive gamma squeeze. Over the weekend, we expect more details on Ethereum's privacy implementations. And looking ahead, on September 26th, a $9.1 billion Solana token unlock will test the market. So this week combines these three biggest crypto catalysts, Fed policy, technical breakouts, and fundamental updates in a way that could define the direction of the entire fourth quarter. So the bottom line is Bitcoin is holding at a critical support line at $115,000, showing calculated strength ahead of the Fed meeting. Ethereum just dropped the privacy roadmap that is key to unlocking trillions in institutional DeFi. And the SEC is playing the long game with ETFs, building a real framework instead of just making reactive decisions. And global adoption, that race is heating up, with the rest of the world hitting the accelerator while the US plays catch up. So why it all matters? Well, this isn't a collection of random news stories. This is a snapshot of an entire asset class maturing in real time. You have technical strength, massive fundamental upgrades, slow but steady regulatory progress, and accelerating global competition all happening at once. So the market is coiled like a spring. So the noise over the weekend is settling down and the signal is crystal clear. Crypto is no longer a fringe experiment. It's a sophisticated global asset class bracing for a collision of fundamental, regulatory, and macroeconomic forces this week. Volatility is guaranteed. Opportunity is there for the prepared, so stay sharp. And that's the way it is. I'm Crypto Cronkite. Hit like or subscribe to stay on top and be ready for that next drop.